probably the most complex situation currently in the market, and also probably the most important, is around inflation. I was joking yesterday saying that the word transitory was a word that I think was in everyone's kind of vocabulary, but never had the importance that it now has when you look at financial markets. And obviously earlier this week, the chairman of the Federal Reserve was asked to kind of define, like, what is transitory, right? You know, it's not such a quantifiable type word, which may actually be a benefit to them. And so let's just talk about inflation in general. How do you evaluate what we've seen so far with the high CPI or core inflation numbers? And then what is the evaluation of, is it transitory? Is it not? And kind of what people should know when we think about inflation in the current environment.
There is so much to unpack as it relates to inflation. I swear we could spend our entire time together talking about it. So I'll try and give you the Cliff Notes version here, but there's a lot of aspects to this. We're definitely in the transitory inflation camp. And so I'm sort of grinning because I know that, you know, everyone's like, oh, they're going to come after her, right, for this opinion here. But let me share some thoughts around why we think it's transitory. So the obvious one is just the optics, right? Let's just start by clearing the decks on that one. The reason it feels like prices are rapidly rising is because they're literally bouncing off of record no activity. It's not just record low activity, it's literally no activity at all. And so the optics are absolutely making year over year comparisons extraordinary. And inventories are still being rebuilt to pre-pandemic levels, right? So there was a lot of fear and loathing and concern as a function of the pandemic coming on last year. And I think companies really did let inventories run off. And so there's this mad scramble all at once, right? The challenge of flipping the lights back on the global economy all at once. There's just this mad scramble to rebuild inventories. And clearly, as a function of at least Q2 earnings season, we're still not back to having inventories rebuilt to where companies would like them. That's been a key kind of pain point and theme that we've seen play out here over the course of Q2 earnings season. We've also seen pretty dramatic supply chain issues in semiconductors and lumber markets. We've seen security breaches at pipelines. We've had commodity prices rallying in a very significant way. Again, this is kind of unique and a hallmark of this recovery and this cycle, and that we're trying to flip the lights back on all at once and things inevitably break. And so I think that, you know, these are very acute, very specific, short-term oriented issues that will start to work themselves out. Doesn't mean there isn't an awful lot of pain. There certainly has been. We've heard it from companies, both large and small, but we do think that things will start to settle down in that regard, and that will help from an inflation or headline inflation perspective going forward. The other thing that I think is underappreciated is this concept of pent-up demand. So I think market participants in general are thinking that there's going to be this massive unleashing of pent-up demand on the part of the consumer that is just going to continue to drive prices up because demand is really unabated. And that we will get to a place where inflation runs so red hot that it ultimately breaks the cycle. We're not in the camp that pent-up demand is going to be that extreme. And why do I say that? It's not that there isn't some. There clearly has been some unleashing of pent-up demand, but not to the degree I think that everybody's worried about. And it's really, you know, this idea that everybody's pointing to record high savings rates as saying, well, surely that single indicator is going to drive this unleashing of massive amounts of capital into the global economy. And I would say not so fast, because the lion's share of savings actually is clustered in the older demographic or older age cohorts when you think about savings rates. And so, not to make a wild generalization, but I'm going to do it anyway, because I don't think anybody can stop me at the moment. But typically these older age cohorts, you know, boomer generation and older, aren't in highly discretionary spending mode. Again, it isn't that they aren't going to spend, they are, but they're just at a different stage of life. And so I think it's important to frame out savings rates with regard to that, because I think it will hold back some of the capital that perhaps others may think is going to flood into the system. and change the dynamics meaningfully around inflation. The other thing I want to call out too, again, I could go on and on all day about this, is this idea of the fiscal cliff coming in September, right? Extended unemployment benefits expiring in September. Doesn't appear as if there's a lot of appetite from policymakers in Washington to re-up a lot of that. We do think ultimately that will be yet another headwind as it relates to inflation going forward. That stimulus effect is going to start to fade here pretty meaningfully. And so that will change again the dynamic as it relates to inflation going forward. I also have to throw out this globalization concept again, right? If you think about China inflation in the 1% range, Japan still in negative territory. I think the most recent reading from the Eurozone was maybe 2%. But when you look at that, that's certainly a function of Germany and the auto industry, which of course the auto industry has been on fire lately. So very narrow in terms of drivers there. And so I think for better or worse, I think the inflation story in the US is very much amplified relative to the rest of the globe. And so this interconnectedness, I think, is going to continue to weigh on inflation longer term. Again, it isn't that we aren't going to continue to see higher inflation readings over the next few months and even quarters. But to me, that's transitory. That's not structural. That's not sustained beyond kind of this cyclical snapback that we're seeing in the economy. And then when you look out much longer term, demographics, technological innovation, even the supply and demand dynamics in the energy sector are all inherently deflationary or disinflationary. And so what we're seeing right now in our view is much more cyclically driven, not systemic or structural or even secular in nature.
Hey guys, thanks so much for watching that clip of the Best Business Show. Make sure you like and subscribe to the channel, turn on notifications so you know when we go live every weekday, and then head to SoFi.com/pomp so that you can get an account and we can get after it.